start rolling in. So my big question for you was, as we get started here and let people roll into the conversation, is did you have as good of dinner in DC this trip as we had the last time?
No, it was good. It was really good, but that was one for the ages.
Oh,
The company and confidence in food all together was just so unique. How about that?
I appreciate that. I was having some major FOMO last week because I just couldn't make it work in my schedule. I mean, sometimes your life just takes over, right? And you just can't,
Right. Oh, absolutely.
it just doesn't happen. So, hey everyone, thanks
Sure.
for joining us. This is the last week in Mortgage Today. We're going to give it just a few more minutes here and then we'll get rolling. We have a bunch of people coming into the conversation. But yeah, I so wanted to be there, but I just could not. I tried to finagle it every which way possible, and it just wasn't. It was going to cause a major inconvenience to somebody else that I would rather not do that to. So, yeah. So, like,
Gotcha. Makes sense.
hi Bernard, glad that you're on. He's now calling you Tommy Baseball.
Hey, there he is. Bernard, what's up, buddy?
Glad you could join us today, Bernard.
Always good to see
For
you.
always doing so. All right, I think we're going to go ahead and get started. Hey, everyone, this is the last week in Mortgage Today. I am Faith Howard Mooney, the SVP of Member Engagement here at the Mortgage Collaborative. I have with me today someone that many of you probably already know, Tom Sullivan, who is the SVP and Mortgage Market Manager at First Commonwealth Bank. Thanks for doing this, Tom.
My pleasure. Absolutely. Glad to be here.
And for those of you who don't know, we just did an interview a couple weeks ago on Inside the TMC Family that gives Tom's story. So if you didn't catch that, you should go back and check that recording out in our YouTube. It will give you some perspective on the chat that's going on and what Tom was called. And that made me so happy. It involved Minnesota as well. So it was a very nice interview. So we appreciate that as well.
Absolutely.
You are at First Commonwealth. You've been there for a while. You want to share with the group just a little bit about who First Commonwealth is?
Oh, sure. Tom Sullivan, First Commonwealth Bank. We are a community bank. We're an $11 billion bank. We are what I would consider a full service lender. We have over 120 branches within the bank. We use our portfolio for specialized products like LMI, CRA products, and then we work with, I think what it is now, 9 investors as well. So we try to do the best of both worlds, have the investor piece for national pricing, and then we have obviously the portfolio for the community bank flavor. So that's us. I've been there for 10 years, started it up with Stan Foraker. He's Batman, I'm Robin. I do what he asked me to do. I'm his sidekick, and it's been a great ride. 10 years, it's been humbling. It's been exciting, fun, crazy, laugh, cry, but yeah, we're here and it's been a great ride.
Yeah. And you and Stan both this time were with us this past week on a trip that we do to meet with the agencies in DC. For those of you who don't know, we did this. It was our second year that we did this. We do plan on doing it going forward. We had about 12 lender members there with us, and essentially went and met with the agencies to give, with the idea of giving the perspective of a lender member that is small to mid-size, and from our membership overall. So both of you, both Batman and Robin, were there this year. This is your second year in doing that with us. So I would love to, number one, I'm going to do this before we get started so I don't forget. Big shout out to Mark Cunningham of Trained for hosting the entire crew on his boat after dinner while you guys were there. That sounds like that would have been a lot of fun. So shout out to Mark for doing that. He's such a good guy. But while you were there, one of the first places, or the first place I think that you went, was the CFPB. Anything that happened
Yeah.
from meeting with the CFPB that you would just love to share?
So I would love to share this. I think that, When we
Uh-oh.
look at the CFPB, we look at us, as an industry. I think what they're now focusing more on is the third parties involved in the transactions, which they should. It's the credit bureaus, right? The soft pull fee increases, the AMCs, bidding up appraisals, battling, those type of things. It's something that, the work number. I mean, the astronomical increases in soft pulls. I mean, I look at our competitors, I look at those in the room, and I think to myself, we're all doing it the right way. I mean, the third party
Yeah.
aspect is where we need to look at some of the things that I feel aren't fair to the consumer. And then I think what the CFPB is looking at, honestly, is, we have to pay all those fees. We incur all those fees, right? And they're talking about the quote unquote junk fees. But I think their concern
Yeah.
is, those that we can't do a loan for, we have to incur those fees. And they're afraid that we're passing on the fees to the consumers that actually can get a loan for the ones that we couldn't do a loan for. So it was an interesting perspective, but I really saw a lot of it being, their focus is more on the third parties, the credit bureaus, things like that. So I thought it was interesting.
Yeah, and that would have been a change from last year. I mean,
Yeah.
definite
Yeah.
focus shift for them. I wondered, I'm glad that you said something about, obviously the cost to originate a loan has continued. It has not gone down much. It's still in the 12 plus $1,000 range with a high at like 13.2, I think, or something like that. So yeah, so I suppose that probably is where their focus is. Great to know that though, and also great that you don't have to have everybody focused on you from the agencies. Maybe
Right.
it's better that you don't, right?
Right, exactly, exactly. So it was just really, it was enlightening. I mean, we talked about some other lender related things, but that was something that was a refreshing takeaway for me and for, our counterparts, in my opinion, that, they're looking at those fees because, I mean, we need to make money in the industry too. We want to be fair to consumers, but, passing on fees to the lender, is something, and third parties increasing those amounts of money that we have to expenditures is not fair to us as an industry.
Yeah, I would agree with that. So from there, you went to the FHFA, so Sandra Thompson. Um, you talked a little bit about repurchases, I understand, and I think that has been a big topic within the TMC family. So would love it if you would kind of give us some perspective on what that conversation was.
So yeah, I mean, Sandra Thompson was awesome as always. I mean, it's always just so, she just has an aura about her, and it was really enlightening for her. You could tell she's always listening to us. She has always been somebody that advocates on really trying to help make change. And one was when we talked about the repurchase risk, especially more so than others. Freddie has been an issue. I mean, for all of us in some way, shape, or form, and usually it's appraisal related, and she was surprised and listening, and she actually had a meeting the following day with Freddie. So it was time. The timing was pretty strong and pretty great that happened. But it's just a matter of, again, putting in policies, procedures, perspectives in place that we can understand. Going back 3 years on an appraisal, or doing things like that, just that don't make sense. And we were able to just voice our professional opinions on things like that. So that was one of the things that we had talked about. Another thing that we had talked about is just the second home pricing and the pricing of, what that looks like versus, a primary residence. It's high. And I know that there are concerns about investment property versus second homes, but again, when it's truly a second home, the customer should pay what second home pricing is. And it's just like, we're blanketing a problem by increasing costs. So that was another thing. And I'll let you keep going, but I just, just some of the
No,
stuff that was going
no,
on.
that is great information I have. I wonder do you think that second home pricing is not on their radar just because there's so much lesser of it in the industry right now that it just doesn't land on their radar? Or do you think
I
they truly believe that if it's a second home, it has essentially an upcharge to
Well,
it?
I think honestly, it's just a matter of, trying to blanket a concern, that, people are, consumers are trying to game the system and get a better interest rate on an investment property versus second home, because there was always a price disparity there. And
Right.
they're kind of just blanking it with something that's, you know, not as cost effective for a consumer. And right now, we need as much help as we can get, especially with the interest rate environment we're in. So yeah, I do think there's part of that has to do with it, but the other part of it is I think they're just trying to mitigate a problem, but it's causing an additional problem, really.
Yeah. Yeah. Well, and it sounds like too, FHFA is going down a path that I know the CFPB had a committee working on some stuff. So I understand that you heard them share for the first time while there that they are looking to develop a committee.
Yeah, that's pretty cool, right? And I just a matter of having, the Mortgage Collaborative and groups and organizations that really want to help the industry, seeing it from year one to going to see them, now makes me realize that there is an impact being made for them to provide and roll out an advocacy advisory committee and to make that a thing, is telling me that they're listening. They want to better the industry, and we're a part of that. And I think it's something that Mortgage Collaborative should be very proud of.
Yeah.
It's awesome to see some movement being made and voices being heard.
Yeah, I think it's great. Sandra Thompson to me is, she may not have the right answer for you right in front of you, but you can almost like see her brain working, I think, when you meet with her and watch her when she's taking notes. I mean, she does not miss things. She's someone that I do feel like she hears it and understands it. But I really do think that she hears what is being said and she takes it seriously.
Yeah,
Um,
she's an architect of bridges. She's a bridge builder. She
yeah,
wants to make and bridge gaps and make changes, and whenever that was one of the last things we did that day. I was really excited and energized just to see her, talk to her, know the sincerity of what she's trying to accomplish, and she respects the voice of the Mortgage Collaborative, and that's pretty cool.
yeah. Well, and she respects the voice of not just the large lender either, which I
Very
think is
true.
is really important that she's trying to get a perspective of multiple places. We're gonna have to be careful next year though, because I understand that she always has 30 minutes. That's what you get with her. And we always have her for way more than that and stress out her admin a little bit on the
Yep.
side of that one. It's like, okay, it is time to go. This is great conversation, but you need to get moving. So that's
Yep.
always fun. How about so FHA advisory committee, creating one now. That they're going to send us the application to be involved in that. It is a 2-year commitment, is what Melissa had shared with me. So for those of you that may have interest in doing that, um, please get involved however you can. What about FHA? You were at FHA as well.
Yeah, so FHA is just, it's always the same in the sense of some of the concerns that we have, but it feels like they are listening. Um, the collateral piece is always something that's brought up. The MIP piece, the APR piece, because of the insurance premiums, was brought up. The dual comp concerns, which is is always a concern where we have agents representing, being a part of the transaction as a loan originator too. So all of those things were brought up. I will say this, I always try to think of perspectives of things, when they pulled the dual comp situation together. In my opinion, this is just going to be me kind of just spitball, but my opinion was they were trying to really get FHA to be utilized more. It hasn't really paid dividends. And in fact, it's kind of given a dirty feeling to the industry with it. So I think that it kind of backfired, and I think it's something that potentially will be backtracked. I think that it's all about the consumer and all about making sure that the fees are in line and everyone's taken care of. But when you provide a professional both sides of the transaction, they're going to find every way to squeeze every fee out. Let's just be honest. So it was an enlightening conversation. It was good straightforward conversation. We talked about insurance, how it's really hard to get homeowners insurance in general, especially in certain demographics and how expensive that is.
Yeah,
And, and honestly, you got to look at, a lot of the first time home buyers out there. I mean, their debt to income ratios are already strained, and, you're offering pre-qual letters and pre-approvals, but once that homeowners insurance premium comes or that it is repriced down the road, are we in an affordability issue? So there was just a lot of great conversation about today, tomorrow, what we're going to do. And also the MIP piece, I know the MIP mortgage insurance premium was brought into play to protect FHA for, defaults, foreclosures and whatnot, but the delinquency is minimized and we're really not seeing that. So it's just, I think they're taking themselves out of the game a little bit in the industry with the fees, and that's
yeah,
was part of the discussion as well.
yeah. It's one of those things that, I don't know. I guess I've always thought about it kind of this way. My very first mortgage was an FHA mortgage. I think a lot of people's were, but that was a long time ago. And, what worked then and was important then, is that really what's as important right now? The
Absolutely.
delinquency
I
rate
100%
is
agree.
so
Yeah.
low compared to what it probably was back then. Back then, it was a much riskier transaction, right? Um,
Yep. Yes. And honestly, a lot of the industry, I mean, the industry's aged to a degree. I mean, some of the top real estate agents still don't understand the differential of what FHA is, how that really delivers, and they are actually not even accepting those offers. So
correct.
it's just a matter of the education piece of it. I think there needs to be refining, a retooling of it. I do feel that when we do talk about this, they are listening. And I do feel like it's something that is going to eventually evolve to make that a better product down the line.
Yeah. Yeah. And so, yeah, I think that if that could increase adoption, if it maybe looked a little bit differently. I always forget like what people know and understand. I think a lot of us do, and it's always a good reminder when you're talking to other people that aren't in the mortgage industry. I haven't had the opportunity to go with a friend to a couple of open houses. She's looking at purchasing a different home this weekend, and I was amazed at the real estate agent working for a builder. They provide a subsidy. She could not explain what the subsidy was, but she is the representation of the subsidy. And so it's like I found
Right.
myself stepping in and saying, okay, here's where this is my explanation, but you need to go here, here, and here to figure that out. And is it a seller concession? Because then it can only be applied certain place. And it was like, why did it, I mean, people just really sometimes don't even, and this was I would say this was probably a more professional agent than most. But it makes me
Right.
confused a little bit.
It's
If you have
crazy.
them being the LO then as well, are people going to get the same type of information that they would from a very seasoned LO who works in FHA every day?
That's
Yeah.
exactly right. And honestly, it's like anything else. If you have the tools to educate, you could probably provide more options for your customers, land more opportunities. That means from the real estate agent side and from the MLO side. I mean, you look at this, and I think about like quarterbacks, how they have their little cheat sheet on there on their plays. They need to understand enough to be dangerous. They need to understand the basic plays of these products like FHA. Okay, no income restriction, right? That's a game changer to a degree when you're looking at a 3.5% down product. So it's just a matter of it's what we kind of do and educate in our markets, basically like the top 5 things of what's important for each product. And if you have that information as a professional, as a real estate agent, you can show and deliver much better performance overall to your customers.
Yeah. Yeah. And I think there are some people that could do that dual thing, but I don't think it's everybody in the industry. I do think there
Agreed.
are some
I
unique
totally
people
agree.
who have the skill set to be able to do that and represent both well. But I don't know as I think it's everybody. And it definitely wouldn't be an agent that doesn't work full time and have their fingers all over all different types of business, I would say. Yeah,
Totally
so
agree.
Also, while in DC, people went to Jenny, Freddie, and Fanny. And I'm going to encourage those of you who want to hear like the rest of what is going on related to those meetings that were held. If you join our Community First working group, and I'm sure one of my great team members who's on this call with me will probably pop the link into the chat, is meeting, I believe it's next week, or is it this week, Thursday? Ashley popped it in there for you. So there it is. Teresa Rose, who is also part of this trip from Western Ohio Mortgage, is going to get on that call and talk with all people that are involved in the Community First. It's this Thursday. Thank you, Ashley. She is going to kind of to give a debrief on those meetings that were held as well. Overall, sounds like you guys had like a fantastic trip. I was back home seeing the pictures and feeling sad that I wasn't there with all of you this year. Share with me, like last year, I felt like for you, it was just an eye-opening experience. Share with me your favorite thing about having done that this time around.
So I'll tell you this, it was night and day for me. I looked at it was kind of like dipping our toe in the water and kind of see what it's like. That when we came in there, it was more welcoming. The organizations were, it was like we've known each other for a while. It was like anything else. If you repeat the same type of efforts, you get better results. And it was a more depth, more informal yet more detailed, able to ask more questions, just be real. I thought it was really awesome. I think my favorite part of all of it really is hearing the perspectives in the room and how each of these different parts or concerns that we have within the industry impact each other, because they are regionally different. And I do think that's a part of it. I do think that my favorite part really is just being able to have the ability to go in and have these conversations and feel like when I leave, it's not like we're just showing up to show up, right? This is something that's real. This is something that's sincere, and it's something that's going to help impact our industry in a positive way. So I think it's just feeling like we can make a difference to all of our peers in the industry and really have a voice. I think it's just phenomenal. I'm very blessed and thankful for being a part of it.
That is wonderful. We always love it when people like you are willing to engage in these wild ideas that we have every once in a while. And then they turn out to be something that's been really a great thing for everybody. It just makes our heart really happy to feel like our lenders are being heard. And
Absolutely.
at least and have the opportunity to share. So appreciate you being willing to take that trip with us. We're going to shift our focus for the last little bit of time that we have left and talk a little bit about, you've been there for 10 years, the power of marketing. I'm sure you've seen, well, First Commonwealth has always been very heavily engaged in affordable lending, even from before when it was kind of like the popular thing to do. That was always a commitment that you had to the community that you served. I remember when I was on the appraisal side and answering questions about how are you going to serve this community. We have appraisal challenges and those types of things. And so that is something that you've always been involved with. Marketing has changed on how you do your outreach and everything over the last couple of years, and with a new generation of people coming into it. So I saw this very unique article, kind of ancillary to the mortgage space, this past week, and it was about how plumbers and construction workers are making being blue collar cool. And it's like, okay, I need to read this one because I need to understand what's going on. And there's such a shortage still of people that go into the trade. So I'm like, I want to hear like what they see is going on there. It was actually published by MSN, if anybody wants to go out and find the article on it. But it was talking about people not wanting to incur the college expense that is associated with a 4-year degree. People not knowing if they really wanted to go to school for 4 years, and finding alternatives. And so what it did is it interviewed some individuals, young individuals, that have went into plumbing, being an electrician. I mean, it's very standard trades, but they've taken a new spin on it, which I think is always interesting. It shouldn't be surprising to me, but for whatever reason it was, we have all of these people out on TikTok and, you know, other places that are getting paid money to share product and or share content. And you see it a lot in like the fashion industry and, you know, people being influencers on for Amazon and some of those other places. What you don't realize is how much money some of these individuals are making. So
Right.
this was the Gen Z perspective on how to make trades cool. 2.2 million people on TikTok, Instagram, and Facebook. So one of the individuals happens to be a female, enrolled in a vocational school. I believe she was an electrician. She makes six figures in her regular job. Guess what she makes from a different standpoint from clicks and branding deals? Another six figures, over $200,000 a year. So what she does is she videos from a job site, what she's doing, teaches people how to do it if they want to, and then gets promotional dollars from the companies, the product companies that are involved in the products that she would normally use on top of her regular salary. And it's like, why wasn't I that smart when I was that age? What do you think of that?
Awesome. A great idea. That's awesome. I mean, what a smart way to do your business. You're double dipping for yourself there, right?
You are. It's kind of like having two separate jobs. I just thought that was pretty incredible. It went on to talk about a plumber. The other thing that I thought was super funny is these are obviously creative minds that have went into the trade, because there was a plumber out there who named his company Mother Flushers.
Of course he
And
did.
I thought, you know, that's kind of funny. I mean, it just made me laugh. I mean, in the industry that we're in, you kind of have to find things every once in a while that are funny. So if you think about this from like the business perspective of the business that we do and how you maybe need to like change up things a little bit, the hashtag blue collar drew 500,000 posts in the first 4 months of this year. Up 64% over the same period in 2023. Electrician increase, the hashtag electrician increased 77% over the same period of time. And hashtag construction worker and hashtag mechanic posts jumped a similar type of amount. So as I would encourage you, as you know, you're thinking about your business out there these days. I know obviously there are restrictions when you talk about mortgage and what you can say and what you can't say. But I thought it was just refreshing that there are these very creative people going into trades, making great money, number one, don't have the college education expense. And in the article, one of the things that it stated in there is it was sad to some of the people that the reason why they felt like people began asking them about trades and stuff is because of the car they were driving, the truck they were driving, because they could afford to do so, and they were a young person, and they were looking to steer the conversation to more about why I do what I do, and it's not about what I own, right? So I thought that was refreshing as well, from individuals in that particular age bracket. So for those of you out there who have kiddos who just don't want to go do the 4-year experience, they've got some people showing them out there how to do it a different way. I want my hairdresser's salary, to be honest with you. I think I should have been a stylist or something, although I would have been really bad at that. But some of the trade groups in mortgage and the other people providing services like that, it's a great way to make an income and have a flexible life.
Right. And social media is just a killer. I mean, we probably bring in, well, we did a little metric. We're bringing in at least 12% more business because of our social media outreaches. And
Is
it's very
that
important right
right?
now. So, it couldn't be more important. And we really have made a big effort on the social media space. So it doesn't surprise me. It really doesn't.
Yeah. So, are there things, are you just doing more of it? Are you doing things differently? Can you share just a little bit before we go?
So yes, I can. So we actually, I'm going to give a little plug to a TMC family member, a social coach. We use social coach.
Okay.
Social coach has done an outstanding job for us. Our team has at least 14 pieces of content collaboratively that go out. And then we also have at least 3 dozen videos going out every single month on different content in the industry, loans closing, why choose this loan officer, about a personal side of it, interacting with our bank partners. I think that's huge. Whenever you're lifting somebody else up on social media, it's a huge piece that brings people to see it. And just we are, for a little bank, quote unquote, we really do have a big social media outreach out there. If you ever pop up on take a look on LinkedIn, look at me and the first Commonwealth team, we really have made a focus on it, and social coach has done a wonderful job for us.
And what did you say your percentage up is in follow?
12% we've increased.
12%. That's
With yeah, 12%. 12%. I mean, think about that. I mean, in this industry right now, if we could do anything to move the needle 12%, we're jumping all over. We get one loan extra a month, we're moving in the right direction. And it's just a great retention tool. It's a great tool to tell our story. It's a great way to collaborate. And it's also a great way to individualize who you are. So none of it surprises me that you said, because it's such a crucial tool for the industry.
Yeah. Well, just kind of a fun thing. I like to find articles that are a little bit different and interesting, and that one just caught my attention. So thank you for doing this with me today. It always is when I talk to you, so I don't know why I say that like I'm surprised, but it's always a lot of fun. I
Always.
always enjoy our conversations and appreciate everything that you do within the TMC family.
No,
Thanks.
thanks for your time. Always great talking to you. Thanks, everyone. Have a great rest of your day.
Bye.